futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
The market today coming from the metals, both gold and silver, climbing to new records. And joining now, we got Phil Strebel, Blue Line Futures Chief Market Strategist. Phil, it is great to see you. As always, Phil, your timing is impeccable because we got gold and silver hitting all-time highs here, Phil. Let's start on bullion and just the blistering rally we've seen, Phil. First, just help us explain what you think explains the rally in gold, Phil. Would you chalk that up to, is that the Fed? Is that central bank buying? Is that geopolitical tensions? Is it all three, Phil?
Yeah, it is. It's multiple structural drivers. They're continuing to support gold, and its strength is shown in the price. I mean, you look at central banks, they've been diversifying away from U.S. dollars, other currencies. They've been increasing their gold reserves, adding that structural support to prices. And this really began in 2022 with Russia and Ukraine, where Russia really shifted a large portion of their FX reserves into the gold market. So the average central bank, they hold about 20%, where China only sits at about 6 to 8%. So we believe that the goal is to bring this up to 30%. That's a lot of those emerging market, their central banks here. So this sets up for a multi-year trend with them continuing to increase those gold holdings. And then you get the ETF flows and the portfolio diversification. So if you look at year-to-date percentage change on ETF flows, up about 18% this year, and more individuals and institutions are recognizing gold as a key cement of strength in their portfolios.
Do you think, Phil, I've seen some strategists say they also chalk this up to the decision by the EU to freeze Russian central bank assets. And their point is they think other central banks around the world saw that and thought, okay, yikes, we better own something that can't be taken from us. What do you make of that?
110%. You nailed it right on the head. That's exactly what happened because of the fact that Russia stored a lot of their assets on certain payment systems and stored these assets. And then all of a sudden, those get frozen. And you start to look at, like, if you're Saudi Arabia or you're some other country out there, you're going to go, wow, this could happen to me as well. We probably want to bring this down just a bit, and we want to increase our gold holdings and other key metals, and that's what's happening.
So now, Phil, looking ahead, what do we expect to see? Let's put a number on it. So Goldman's base case next year, Phil, 4,900. They tell clients they see upside risk. Does that sound right to you?
Look, Josh, you got to get through 4,900 in order to get to 10,000. That's the reality. So I believe that gold prices $5,000 in 2026 could easily come. I mean, look, we're at 44.70, up $83 on the day. The average range is $86. I mean, in reality, if it continues this trend, something like we saw, like look at a weekly chart on platinum, gold could be at $5,000 by the end of 2025, let alone anything into 2026. I think that you got the support from the Fed cutting, and investors are just getting smarter. That traditional 60-40 portfolio is dead. People are realizing they need to add strategic key commodities to it, such as gold, silver, copper, to their portfolios for diversification. So you're just getting this rising tide lifting all boats.
So you mentioned all the reason for optimism, Phil, but what are, before I move all into gold, what are downside risks I do need to consider?
Okay, all of a sudden, this crude oil prices, it's up $1.40 right now, up 2.6%. Crude oil futures suddenly go into this raging bull market, geopolitics increase, inflation is back in play, oil's at $75, food inflation starts taking off as well. Next thing you know, the Federal Reserve, they got to turn hawkish, and they got to start talking about raising rates. And then that would be the problem for the gold market right there. That would probably be the number one problem that could occur with the gold market.
What you mentioned silver before, Phil, also what a move. What are you looking for in 2026 there? What are the levels you're watching?
Well, I think that, silver, realistically, we were running the numbers like what would 65 to 1 with gold at the ratio, gold-silver ratio with gold at 5,000. I think realistically, we could see something like $75, $80 silver. It's the best performing commodity. It's It's tied into that copper market. You got that energy transition taking place where, copper, silver, they're vital for electric vehicles, power grids, renewable energy, data centers, and AI are needing mass amounts of energy. And that's where copper and silver take off to the upside. You also have mining issues, production cuts, operational challenges, and it's just an underinvestment in that area. And you're seeing these countries really come out and they want to hoard strategic materials, minerals, things like that. And silver, copper, platinum, palladium, they're all one of them.
What about, Phil, I'll get you on this, we're talking metal. What about the miners, the gold miners specifically? You want to stay long there?
Yeah, miners have been fantastic. I mean, they've just gotten this tailwind from the price action there. All of a sudden, some of the core that they had that they've dug up, which it has not been able to pay for itself and being refined and being sifted through. Now, all of a sudden, with prices where they're at right now, some of the material that's been not as profitable all of a sudden comes to the table. You get the tailwind of lower interest rates. I mean, the only thing you would want to watch is like the M&A activity, because a lot of times, rather than them returning the capital to shareholders, they go out and they buy other mining operations, and that's where M&A pick up. And a lot of times, these miners don't make the best decisions when it comes to that.
Phil, always great to see you and to have you on the show. Happy holidays.
You too. I want to see you soon. I'm going to come out there.
You got it. Anytime, Phil. We'll take you any day of the week.
Thanks.
Trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including this specific material, used and distributed by Blue Line Futures LLC shall be construed as or in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.